Well, good day. I don't know if I should call it evening, late afternoon. It's a combination of all that. We're about 5:15 in the afternoon, and this is Thursday, first day of spring, March 20th, 2025. And, most of the day today, the stock market was up. In the afternoon, it started breaking down, and by the end of the day, all the indices were actually in the red. I didn't quite understand the rally because, to me, I listened to what the Fed chair said, and he said lower U.S. economic growth and higher inflation. I don't get why that's bullish the stock market, but I think what it has to do is that so many think that because the Fed now has the markets back, and I do think there was a pivot, I mentioned it yesterday, where the Fed isn't scared to lower interest rates even if inflation is going up, if labor weakens and if the economy does what they think and slows down. Then they'll be there for that. So you're getting funny bumps. Was it a pivot? I happen to think it was. Gold is paying attention to that and still saying, under those circumstances, I can live with higher gold prices. Silver hasn't been as strong as gold. It recently weakened against it. The dollar tried to rally today and gave back about half of what it gained, very close to that. The euro is making up some ground. It got hurt against it. In fact, most currencies were down against the dollar, and tonight they have to decide what to do. Bonds and notes, you were looking at interest rates making a move today to continue to lose yield, which is important. Last but not least, I've done a special report on gasoline for you, and we'll talk about it as we get into this. Remember, my reports are only up for 3 business days. So I did this intentionally so you can catch it over the weekend. It is an important report. I talked to seasonals, but we'll get into that in a moment here. So let's go to the chart action and see what we've got. I'm not excited with a bounce off of this. This is a weekly close-only chart of the S&P. Does that look friendly to you? Okay, might, not to me. You can see where the market peaked out. I mean, when you look back at it, you go, wow, triple top. But it was this formation. There was a line you could drive right through here. It was a rising wedge. And when the market came out the bottom of the wedge, you had hurt the market. Actually, you lost everything in the bullishness. And this is what you pay when that happens. So we're getting a bounce. I could make an argument real easy that the market could rally to the 18-day average, but I have trouble getting on the bandwagon of wanting to be real bullish as we're just getting to the point in front of tariffs and we don't even know what they're going to be. I don't know what kind of tariffs are coming out. Maybe you do. I look at my neighbors in the North, Canada, who right now aren't favorable to Americans, and I get it. Believe me, I do get it. But they have China's tariffs now hitting them on their canola and all their other products, and we're about to hit them in dairy, lumber, aluminum, steel. They are getting crushed over there. And remember, the U.S. doesn't get hurt as bad. That's why traders are still liking the stock market, because we're a consuming economy and we're the world's largest consumer. Also, we've been exceptional for a long time, and that seems to be disappearing. But you can see how the market rallying back to the 18-day average. I can see that, but it'd be a bear market rally mostly, and that's about it. You're no longer running the lower Bollinger Band. This was that gorilla glue trade that I talk about. Once you move away from it, often it's accompanied by losing the bearish embedded reading, which this did, and before prices get down here, often, very often, market and the closest main moving average, in this case the 18, make a run at each other. The same thing happened in the NASDAQ. You can see where you've lost it and you're making your run there. The Dow, come on, you're getting pretty darn close. Look at today's action, just about on top of it. You absolutely hit it in the Russell, but you're not going anywhere. These are, so far to me at least, nothing more than bear market rallies. You get better proof of that when you go to the weekly charts. In the DAX, we're finally getting a correction of something. We are overbought. The market could easily pull back to the 18-day average to regroup. It doesn't have to hit it. You've had your break. But because you're overbought, I would have a very difficult time wanting to jump in and buy a rally that began down here at the beginning of this year. This is all due to President Trump and telling them the United States, and I'm talking NATO members, the U.S. will not be there in Europe to defend you if you don't meet your obligations of putting X amount of GDP into the market and creating your defenses. Germany's the first to do it. They have to change their constitution to do it. They're doing that, and this will fire up industry, and that's the spur you need. You know, wartime does drive industry. You've got to think that. We're not in it, but they've got to do that. I'm even hearing talk that they want to change the lead general of, he's got a certain name. They named the lead general something. Starts with an S, Secure or something. And they want to change it maybe where it's not the United States. Maybe it should be in Europe that they have the lead general. I don't know. There's a lot to think about right there. But I know President Trump is talking that. We have seen the 10-year notes, and as you know, what I teach you here over and over, first time you hit Bollinger Bands, it doesn't always end it. You see here, but when they narrow in like that, it can. So you've narrowed in again. It's hard to tell if you would continue going through there or not. But what traders typically do is they'll take off part of the position at a minimum. If you have a wider band like you did here, I think they take the whole thing off. So that's just how I teach it. When you look at the 2-year notes, you have a lower low, a higher high. You're in the middle of no man's land there. As for the dollar index, while prices rallied, they are starting to drop tonight. You have an embedded reading at work here. I still think if this market clears this area, you could be down quickly into the 102, 102.50 area. We'll see if that happens. And if the dollar's dropping, will the euro get a rally? That's the hard question. You're just flirting right now with trying to keep it above the 80 level. In order to prevent this market from going underneath 79 over the next, let's say Friday through Monday, you need to close both higher and in the top part of the day's range on Friday. We'll see if that happens. In the British pound, the market's starting to leak to the downside. Sooner or later here, what's going to happen to the pound, in my opinion, it's going to come back down to this 128.70 level. I am not bearish. Let me make this clear. Until the red line's under 79, what I just said doesn't happen. Once I see that, I jump on the bandwagon that that's what's going to happen. Do we understand it? This is clearly not the spot that I'm telling people jump back in the market. And I'm also not getting bearish. In Bitcoin, you try to rally up to what? Remember, what do I call the red line, folks? Question and answer time. I call it the line in the sand. It is the number that the market often, it's not, you can't use the word always because that's not reality. Often, to me, means 60, 70, 80% of the time. So it's much more than 50%. Often, it goes to this number and fights battles. See it? That's what I think is going on. Does it mean we're bearish? No. I think you've left the bear camp, but you haven't entered a bull camp is what I'm saying just yet. I am in the bull camp in energy here. You've got the higher lows, higher highs. You tried the upside, failed. So until you come back through this low, I think the pros are friendly in this market. WTI, I'm not quite there yet. You don't have the higher low, higher high pattern, and you are overbought as you're overbought in Brent. I am certainly not saying jump into Brent at these prices. And when we get to heating oil, I thought I checked. This is not heating oil anymore. This is gasoline. I've got the wrong title. It just didn't change. When I look up here, the symbol for gasoline is ERBK 25. So I've got the right price. I've got the wrong label. Everybody, I apologize for that. But I'm getting friendly this market. Higher lows, higher highs, conversion time. Now, again, do I tell you to buy when you're overbought? I do not. I never do that unless I had too much drink the night before. I'm looking for a lot of resistance here, but it's bullish resistance. In other words, you got to get up there. I think that as you correct this position down, I think it is time to start looking on the long side of this market as the refineries have to retool for the summer blend, as traders, users, consumers, your kids, everybody wants to take to the road and do their spring, summer driving. Now remember, you rally typically in this market before you start hearing Gas Buddy giving you everything in the summertime about the pricing. It changes. It's a futures market. You move before that event. Look, I've been telling you since you were up here, I thought natural gas was at that funny time of the year. You don't want to be long. You don't need the gas because it's neither too cold nor too hot yet. And each day you have more sunlight now in the United States, and it's less and less demand for it at this time of the year. And that's exactly what we're seeing happen in the market. Wouldn't surprise me if we get back down here. So what I did for you today is simple. I did a report on gasoline because this is the time frame, seasonally speaking, that you start looking at it. You don't do it in June and July. You do it now. I explain why in the report. I give you the 5, the 15, and the 10-year seasonals. I walk you in with our unique price counts and show you that the bear move to the downside, I think, has completed itself. It hit the zone of the third price count. That's rare that you do that, and we're there. I don't expect another leg down. Doesn't mean it can't happen, but I don't expect it. I'm sticking my neck out. By the way, the last time I did one of these reports was your update on the dollar, and it was bearish. How accurate was that one? Doesn't mean I'll be right on this one. Maybe I'll just be 50-50, but I think these special reports are timely. They're only up for 3 business days. Just go to iraepstein.com. And when you're there, just look on the left. You'll see in bright green on the top left, special report. Give it a click and enjoy the viewing. I'm Ira Epstein. You have yourself a great evening. Take care.